Currently, Intel is trading at $19.87, which is almost 60% lower than what they were trading at exactly a year ago. Now, what you have to understand is that currently there is a lot of uncertainty surrounding Intel. No one really knows what is going to happen, and that mainly relies on the internal management. Intel did lose a very strategic position as a premium chipmaker to its competitors as they were slow in innovation regarding the AI boom. But of course they are planning to turn everything around, and the first great step they took is completely cutting their dividend. And this is actually a very hard decision they had to make because they were paying out dividends since 1995, and so by completely cutting their dividend in 2024, they lost their title as a dividend king. So jumping to our stock valuation spreadsheets, let me explain to you exactly why I'm in love with the fact that Intel cut its dividend. With their dividends cut, they can now direct most of their free cash flow into innovation and paying down debt. And innovating is something they have to do to pull themselves out of the pit they are currently in. Now, regarding the long-term liabilities, if we zoom in to the 9th pillar, that is the long-term liabilities over the 5-year free cash flow, we can see that Intel currently has negative free cash flow, and they currently do have a lot of debt in long-term liabilities. So if they kept paying out a dividend, they would go more and more into debt, which really wouldn't be great for the business. Now, going back to the 9 pillars, we can see that Intel's profit growth is actually negative over the past 5 years. And if we zoom in onto these pillars, we can see that indeed the revenue has been falling, the net income has been falling, and the free cash flow has actually been negative in 2023 and 24. But if we have a quick peek at Intel's earnings estimates, we can see that it is expected to hit the bottom at the start of 2025, and after 2025 it is expected to rise, with the revenue rising by 6% in 2025, 7.4% in 2026, and 4.18% in 2027. So it is quite possible that Intel has hit the bottom in 2024 and will start rising in the next years. Now, something I also want to point out is Intel's low 5-year P ratio and their low price to free cash flow. If we zoom onto these pillars, we can see that for the majority of the past 5 years, Intel was trading undervalued. Of course, currently they have a negative P ratio because they have negative earnings, and that is the same case with the free cash flow, with the price to free cash flow, which has been undervalued for the majority of the past 5 years. And we can actually see a recovery path from 2023 when the price to free cash flow hit negative 14.68. In 24 it was only negative 10.68, and currently it is only negative 5.86. So that is a very clear recovery path. So I do believe that Intel is near or has already hit its bottom, and in the next years it will start to grow again. So now let's calculate its intrinsic value and figure out if now is the time to buy the company. So for the Grams formula, I plugged in the earnings growth estimate at 8 and got an intrinsic value of $40.75. Regarding the discounted cash flow formula, I plugged in an initial growth number of 9 billion and calculated the growth rate into the future of 7.7% and got an intrinsic value of $29.05. Now for the multiples valuation, we are comparing Intel to two of its competitors, and here I had to replace Intel's current earnings per share with its 5-year earnings per share, as currently Intel's earnings per share is negative, so the intrinsic value would come out negative. And when we take Intel's 5-year earnings per share and compare to the average PE ratio of these two companies, we get an intrinsic value of $56.01. Now, as we already know, in 2024 Intel stopped paying out their dividends, so we will skip the dividend discount model and arrive straight to our ultimate valuation, where we will average out these three valuation models and get an intrinsic value of $41.94. Now, if I was to remove the multiples valuation, we would get an intrinsic value of $34.90, which is still 75.64% higher than the current trading price. And with a margin of safety of 45%, we would get an acceptable buy price very close to the current trading price of the company. And with that, thank you for watching. Let me know down in the comments if you are buying, selling, or holding Intel into the future, and make sure to leave a like and subscribe, as it really helps me out.